$440 million lost. Not in a market crash, not in a fraud investigation, not in a years-long corporate scandal. In 45 minutes before lunch on a Tuesday, the company had 75 employees on the trading floor that morning. Every single one of them watched it happen in real time, and not one of them could stop it. Because the thing destroying their company wasn't a hacker, it wasn't a rogue trader, it wasn't even a human being. It was their own code. This is the story of Knight Capital Group, one of the most powerful trading firms on Wall Street. And August 1st, 2012, the 45 minutes that erased them from financial history before most people had finished their morning coffee. Before we get to the collapse, you need to understand what was at stake. Knight Capital Group wasn't some obscure hedge fund. They were a market maker, one of the most important roles in the entire financial system. Here's what that means. Every time you buy or sell a stock, someone has to be on the other side of that trade. Knight Capital was that someone for millions of transactions every single day. At their peak, they were handling approximately 11% of all US equity trading volume. Nearly 1 in every 10 stock trades in America passed through their systems. They weren't gambling, they weren't speculating, they were the plumbing of Wall Street, invisible, essential, and trusted completely. By 2012, they had survived the dot-com crash, they had survived the 2008 financial crisis, they had $365 million in cash reserves, and a reputation built over 17 years. Then they deployed a software update. To understand what happened, you need to understand one concept: dead code. Dead code is exactly what it sounds like: old programming that no longer serves a purpose. It sits inside a system, dormant, doing nothing. Every large software platform has it. It's the digital equivalent of a light switch in a wall that isn't connected to anything. Knight Capital had a piece of dead code inside their trading system called SMARS, their Smart Market Access Routing System. This old code dated back to a function they had used years earlier and decommissioned. It had been sitting inside their servers, silent and harmless, for years. In late July 2012, Knight Capital's engineers built a brand new trading algorithm designed specifically to participate in the New York Stock Exchange's new retail liquidity program launching August 1st. They spent weeks building it, testing it, getting it ready. The deployment process was simple: update the code across all 8 of their trading servers. A technician updated 7 of the 8 servers correctly. 1 server was missed. On that one forgotten server, the new algorithm never loaded, but the deployment process had also accidentally reactivated the dead code, the old decommissioned SMARS function that had been dormant for years. Nobody noticed. The servers looked fine. The system showed green across the board. The market opened at 9:30 a.m. The moment trading began, something was wrong. Knight Capital systems started firing orders, thousands of them, into the market, but they weren't normal orders. The reactivated dead code was executing an obsolete strategy that bought stocks at the higher asking price and immediately sold them at the lower bid price. In trading, that is the opposite of how you make money. It is the precise definition of how you lose it on every single trade, automatically at machine speed. Within the first 15 minutes, Knight Capital had taken on massive positions in 144 different stocks. Their systems were placing millions of orders. The market started moving strangely. Other traders noticed unusual activity in stocks like Wizard Software, Radio Shack, and American Airlines, prices spiking and crashing in ways that made no sense. On the trading floor, Knight Capital's team was watching their risk monitors explode. Here is the forensic detail that makes this almost unbearable. They knew something was catastrophically wrong within minutes, but they could not find the source. They had 8 servers. The rogue code was running on one of them. They didn't know which one. Shutting down the wrong server could make things worse. Every second they spent diagnosing the problem, the algorithm was executing thousands more losing trades. At 10 a.m., 30 minutes in, Knight Capital reached out to the New York Stock Exchange to halt some of the trades. The NYSE began canceling orders, but the algorithm kept firing. At 10:15 a.m., they finally identified the rogue server and shut it down. 45 minutes, 154 stocks, millions of trades, final damage, $440 million. In a single morning, Knight Capital had lost more money than they had made in the previous 3 years combined. Their entire cash reserve wiped. Their stock price collapsed 75% in 2 days. The SEC investigated. Their findings, published in 2013, are a forensic masterclass in how a single deployment error cascades into total institutional collapse. The report confirmed that Knight Capital had no kill switch, no automated circuit breaker that could halt all trading activity simultaneously across all servers with a single command. For a firm processing millions of trades daily, there was no emergency stop button. The report also confirmed that the dead code had been sitting in their system for 9 years. It had survived multiple software updates, multiple audits, multiple system reviews. Nobody had ever flagged it for removal because nobody had ever looked for it specifically. Most critically, the deployment checklist used by Knight Capital's engineers had no verification step confirming that all 8 servers had been successfully updated. One missed server had no automatic detection mechanism. 3 separate safeguards failed simultaneously. Any one of them, working correctly, would have saved the company. Within weeks, Knight Capital was forced into an emergency sale. They were acquired by Getco LLC in a deal that valued them at a fraction of what they had been worth 48 hours before the crash. 17 years of building one of Wall Street's most trusted institutions ended by one forgotten server. 3 things this case burned permanently into financial and software history. 1. Dead code is a live risk. Every system running legacy code that nobody fully understands is carrying an invisible liability. The Knight Capital failure is now a mandatory case study in every serious software engineering program in the world. 2. Speed without a kill switch is a weapon pointed at yourself. Knight Capital's competitive advantage was executing trades faster than any human could think. That same speed made it impossible for any human to intervene in time. Power without a shutdown mechanism isn't power, it's a countdown. 3. The most dangerous failures are the ones that look like success. When the market opened on August 1st, every system showed green. No alerts fired, no warnings appeared. The server was running code, just the wrong code. The system was working perfectly. It was simply working perfectly at destroying itself. Knight Capital didn't lose $440 million to a fraud. They didn't lose it to a rogue trader or a market crash or a geopolitical event. They lost it to a checkbox that nobody ticked. One server, one piece of forgotten code, one missing verification step on a deployment checklist. 45 minutes. 17 years gone. The NYZ later canceled some of the most erroneous trades, recovering a portion of the losses. It wasn't enough. Knight Capital, as an independent company, ceased to exist within months. And somewhere in a data center in New Jersey, on a server that nobody remembered to update a piece of dead code, sat quietly for 9 years, waiting for someone to wake it up. They did.